All right, what's up, Tycoon? Super excited for today's video. We're going to be looking at ticker symbol VALE. This is VALE, and this one was a viewer request. Okay, so if you have any requests for the stock you want to see in the next video, make sure you let me know in the comments below. We're starting off looking at the 4-hour chart, and then we're going to zoom out and go to the daily chart and then the weekly chart as well. Okay, so starting off, we're looking at some nice chart patterns that have been forming and also co-aligning with some bullish divergence along the RSI. Okay, the first one here is our left shoulder, right shoulder, head, nice inverse head and shoulders pattern. We were able to come up here and get the full extension on that play. And the next pattern, or before we move to that one, I do want to highlight that we had some bullish divergence as well off of that. So we had a nice, candlestick pattern and bullish divergence. That's when we're creating lower lows on the, stock price. Okay, so we'll do like this. We'll highlight that we're making lower lows here. But if we look in our RSI, the relative strength, okay, is actually increasing as the price is going lower. Okay. So this will be the next point that we're going to look at here, the next pattern. And we have a potential nice little W pattern here, okay? Also known as a double bottom. And we could see some nice possible returns here, over the next week or two, maybe even the next month in VALE if we get a sustained rally. Okay, so it just depends if it's sustained. Not telling you guys to go all in on this. Again, this one just was a viewer request, but I'm looking here and, we have a nice bottom here. We have another nice bottom here. And if we do, find support and rally up, okay, this is going to be a nice W-shaped pattern that forms off the double bottom. And again, we do have bullish divergence. Okay, so, if we highlight this low right here, okay, and we can look, this is the beginning of our bullish divergence trend line. We come down to this area here where we have a nice rally. We pull back, all right, and we're finding support. And again, we're making a lower low. So here's our low, right? Here's our next lower low. Okay, so we have a low, lower low, we have a low, a higher low. These are areas where we're bouncing. Okay, so if you see here, we bounce here, we go on this nice rally, we're coming here, we're starting to bounce off of this trend line. There's a potential that we could keep rallying. Okay, I'm not sure if this is the bullish divergence trend line we're going to follow, or maybe this one. Both of these areas are potential bounce zones, right, to start a rally. And if we do get a nice rally, okay, we have the fibs pulled up here. We have our swing high to our swing low. These are all of our valid support and resistance levels. If you want to screenshot this or, just play this part back, it's going to be 1379, 1419, 1444, 1464. And above there, that's a 50% retracement on our fibs. That's really when we could head into the bullish territory and start to hit some of these price targets of 1484, 1513. 1549, and above there is when we're going to have a breakout and potentially hit our profit targets of 1595 and 1654. Okay, so if you want to get into this, you can get in at a price that you determine you like, and have a clear defined stop loss below 1379 and say, all right, well, if we don't get the double bottom bounce and we drop below 1379, I'll go ahead and cut my losses, right? That's one strategy you could have. We'll zoom out now, okay, and go to the daily chart and look at some of the daily chart gaps. Now, if you guys watch my videos, you know that I show gaps a lot. And the reason being is that these tend to fill about 90 to 95% of the time. So it's really good to know what gaps are present in the market for the stock that you're looking at. And, if we're heading towards those areas. All right. So, we have a nice gap up here. This one has not filled yet, up to about $22. All right. We do have this gap right here, okay, with this gap in between this candlestick. This was in September, okay, and then if we look later in the future, okay, we did end up covering this gap up, all right, in February. Okay, so it took about 5 months for that gap to fill, but that gap did ultimately fill in the market. Okay, then we have a previous gap over here, again, a gap in September, all right, to about $16, $15. And we can see over here in January that gap filled. All right. So the reason I'm showing you all of this is because, again, these gaps do tend to fill about 90 to 95% of the stock market. But there's a lot of variables. And the biggest one is when, right? When is it going to fill? And, if I see gaps down on something, then I'll be a little bit cautious to maybe go long term, right? Because, why would I want to load up the boat here at these price levels of 14, if there's a gap down to 12, and 12 isn't too far from 14, and especially being in a bear market, I don't want to pay more than what I need to for something, right? So maybe you can set some alerts for whenever it fills a gap down down to 12. Or if you're looking to play some short-term bullish momentum, you can look to try to catch the gaps up. Okay. um, so we do currently at the moment have a small gap up to about 1442. All right. We filled this small gap up previously. So this is what I mean. We could look to see if there's a short-term rally to pull us back up and fill this gap on the chart. We could see that again here in the future, come up and fill this area, get rejected and head further lower. Or again, we could form that nice double bottom W pattern. All right. So these are the gaps up that I'm paying attention to. We have one at $19, we have one at 17, and then we have one at 14, about 14.60. Okay. If we go over to the weekly chart and take a look even more on a macro trend, okay, we can see that, essentially this is our channel that I think we're going to be trading in right here, is going to be these purple lines. All right. This is really the area where the chart is going to be bouncing and going up and down. Okay. 23 and then 1119. This is our overall sideways channel. All right, from the highs and our most recent lows that we've created. And we can look, all right, at the supply and demand zones. All right, that's what all of these levels are that I have drawn up. Is going to be my supply and demand zones. Go ahead and fix the screen real quick for you guys. Okay, and the green ones are going to be our demand zones, and the red ones are going to be our supply zones. Okay, so we can see on the much larger like macro trend chart, right, that we are coming down into a previous demand zone where we have been able to find some demand, and bounce previously. Okay, so it's going to be interesting. Are we going to be able to find that demand, consolidate in here, and rip back upwards? The thing stopping us, though, is that we have two resistance trend lines above us to act as resistance. All right, we'll zoom in a little bit closer on those just so you can see. All right, and we have this one here that we broke as support. We were holding it as support previously. We're trading below it now, so we're going to come back up and retest it. It's going to be a valid resistance line as we trade over the next coming weeks. And if we do break past this one, we have our immediate supply zone above from about $16 up to 17. And also this long-term trend line down here that we need to break. Okay, so we have 1, 2, 3 areas of resistance, and we're in a small demand zone. So things aren't looking too great for it, but there is some nice short-term potential. Again, we could rally and look at the 4-hour chart and also the daily chart and get those nice double bottom patterns. But other than that, if we do come up into these areas, even above to about 1850 to 19, I would look for to either take some profits or look for it to eventually start coming back down.